Good morning, everyone, and welcome to the KickStart Specialist Finance Webcast with myself, Nicola Firth from Knowledge Bank, and Joe Breeden from Crystal. So we'll welcome you to the best 20 minutes of your week. So we've got some great criteria updates for you this week. Have to say, it's been a little bit quiet, suspiciously quiet even. We had 147 changes last week, which was down from 207 the previous week. So we were expecting that was a calm before the storm, but the storm didn't happen. Maybe it was the nice weather, I'm not sure, but it was definitely a lot quieter than usual. Perhaps it was a case of people sort of getting back to normal with the valuations in the likes of Scotland and Wales. As you know, the valuations are now all up and running. Everyone's doing physical valuations, with the desktop valuations running alongside as well. But in Leicester, of course, they've got the local lockdown that's been imposed there. So that's physical valuations are being postponed there just for the foreseeable. Obviously, we don't know how long that local lockdown is going to last for. So last week we saw another 90% LTV withdrawal. We'll come on to that shortly. And a small building society gave us another option for self-employed, which is great news. And the specialist lenders, they were notably quiet, apart from one. And I'm going to come on to that because one of them had a lot of changes. They had an absolute flurry of changes. So the Beverley Building Society, so they refreshed their criteria for self-employed borrowers. In what they're calling a bounce back mortgage initiative. So they'll now consider applicants with 1 year's accounts for mortgages up to 75% loan to value. Borrowers with more established business can apply for a deal where the first year is interest only in order to allow their cash flow to recover from the COVID crisis. And the lender they'll consider up to 80% loan to value for businesses with a track record. And the Beverley Building Society says it will base lending decisions on longer term trading records, industry factors, professional qualifications, experience, and future prospects. So that's really, really interesting. So perhaps not a lender that you would have considered, not a big lender, but they do lend nationally. So you don't have to, it's not postcode specific with Beverley Building Society. So certainly for self-employed, if you need a tailored view and a common sense approach to underwriting, then perhaps one for Beverley Building Society to have a look at. So we mentioned the specialist lenders, most of which have been quiet, with the exception of foundation home loans. So they've made a raft of changes. So they've now changed the way that they assess overtime, bonus and commission income. So overtime is now accepted between 50 and 100% based on the information that they have available to them. So 100% of regular bonus and 50% of non-regular bonus can be used towards affordability. 100% of commission payments can be used if it's evidenced correctly. And the average of the last 6 months will be used for weekly, fortnightly and monthly. The average of the last 12 months for quarterly, and the average of the last 2 years for annual and biannual commission payments. And they'll also now consider lending to self-employed applicants with 1 year's accounts. That is music to everybody's ears, I'm sure. Some good news then this week for self-employed. That's 2 ticks really. So foundation home loans as well, they've also made a large amount of changes to their residential mortgage eligibility criteria. So some of those changes include increasing their maximum term to 40 years, that's gone up from 35 years, and allowing up to 4 applicants on a mortgage up to 75% loan to value. And they're also adding the availability of an interest-only option with a variety of payment strategies. So have a look, check Knowledge Bank out for those because they're all on there. And they'll also now consider a remortgage of a residential property to purchase both a buy-to-let both outright and with a mortgage. And they've also increased their size of their maximum loan to £2 million on buy-to-let as well. So some great changes there from Foundation. So the Ipswich Building Society, they withdrew their 90% loan to value mortgage for both purchase and remortgage cases. So they removed that. That was on Tuesday, the 30th of June. So that's gone now for the time being. Newcastle Building Societies. So they launched a new range of residential purchase products up to 80% loan to value, and buy-to-let purchase and remortgage products up to 75% loan to value. So Newcastle, great to see them back in the buy-to-let space, as often happens with lenders, building societies in particular. When they reach their tranches of funding, they sometimes do withdraw from the market. They've got enough business, but now they're back in. So Newcastle, certainly look at them again for buy-to-let cases. So next up, Nottingham for intermediaries. They've released a buy-to-let mortgage for clients borrowing through a limited company. The product's available for purchase and remortgage up to 75% loan to value. Partnerships and LLPs won't be considered, and a maximum of 4 directors will be accepted. And the rental income must be at least 125% of the monthly interest payment on an interest-only basis, and the mortgage payment is calculated at 5.5%. And then we have Roma Finance. So they've launched a new bridging product at 70% loan to value and added an auction product to its range as well. So I know the auction stuff is popular. The new ABM auction product requires no physical valuation, and it's available up to 65% loan to value. And with this product, investors can obtain an ABM valuation ahead of the auction, providing them with a ceiling price for bidding. So that's a great use of ABMs there too. And also as well, physical valuations in Scotland have now been recommenced by Hodge, Paragon and the mortgage lender as well. So good news story. So it was relatively quiet last week. So we have launched at Knowledge Bank our very first criteria clinic. So this is live. It's 12:30 to 1:30 and it's every Monday. And we are going to be helping brokers place cases live for that hour, and we'll be joined by every session. We're going to have a different session. So this week we're concentrating on the self-employed, which is extremely timely given the stuff from Beverley Building Society and Foundation Home Loans. Actually, that was a lovely coincidence. And each clinic I'll host the clinic, and then we'll be joined by some industry experts. So this week we've got Mark Whittier, who's the head of sales from Foundation Home Loans. We've got Frankie from National Account Manager from Newcastle Building Society. We have Richard Miles, the area manager from Swansea Building Society, and Graham Carter, the head of lending from the Beverley Building Society. So you can register on our Eventbrite page. You can register and join us. I think we're already up to, I think we're creeping up to 200 brokers joining us today, which is fantastic. But have a look on there as well, because we have got other events as well. So every Monday we're going to do a different subject. So it might be adverse credit, might be HMOs, it might be equity release. Today it's self-employed. So if you want to extend your knowledge a little bit in that area, listen to some real life case examples, and also every session it qualifies for 60 minutes of CPD. So we'll send you certificates as well. So that's it from me. I look forward to seeing everybody on the criteria clinic later. We've got the third precise session on Thursday. Thursday, that's at 11, and that's on HMOs as well. So if you've not registered for that already, the others have been massively popular. Really hundreds of brokers on there, which has been fantastic, and those presentations are excellent. So I'm now going to hand over to Joe, and then we'll take your questions at the end.
Yeah, thanks, Nick. As you say, other than Foundation, quite a week, I think, on the changes our end. Although new business, as I'm sure for everyone else, absolutely rocketed last week through the roof. We definitely had our biggest week since COVID sort of began in the beginning of March. So thank you very much for the support, and long may it continue, and hopefully we can all turn that into pounds, shillings and pence. I think, hot off the trail of then completing the first post-COVID securitisation, I've got to give a big shout out to Kensington Mortgages on the new business side. We had a tricky deal last week where a customer of ours had missed a loan payment last month, brought it up to date this month, fortunately, but still got recent adverse credit. And again, during the COVID period, we've struggled with anyone with any sort of recent adverse credit for obvious reasons. Kensington took a common sense approach. We got a letter that it was a mistake and an oversight by our customer, and they quoted some terms out on a resi mortgage at 80% LTV, 4.49. So amazing appetite to lend there. I think the guys at Kensington, massive congratulations on the securitisation front, and hopefully that'll mean that we get a few more racier products out there from you guys. Funding of the week, I've harped on about them enough during the period, but Shawbrook Bank again for us, unbelievable lender for thinking outside the box. We had a customer that came to us and had opportunity to buy a business partner out of his limited company, SPV, which they jointly own 27 properties in. He needs to do a 50% share purchase, not purchase into new SPV, but share purchase. Shawbrook Bank, we worked with those guys for the last 12 weeks on this transaction, and we're able to buy out the customer, cap raise for our customer as well. So on a portfolio worth £3.5 million, we're able to raise £2.6 million to enable to buy out a former partner, pay the stamp, raise some capital to the guy to go to auction and buy some properties with him. We do that at a rate of 4.64 on a 5-year fix. So amazing commerciality there from Shawbrook to understand the needs of the customer and to approve an out of criteria product there for those guys. And my hero lender of the week is Foundation. Again, the changes last week were huge. There's a few packager exclusives in there that we've got access to. I think they seem to be being quite aggressive in the resi market and see quite an opportunity to help self-employed individuals in that specialist resi space. We're buzzing to see that a lender being quite aggressive and seeing opportunity during these times. And we all need confidence. And I think to see Foundation come out with the raft of changes they have done, they get the biggest shout out probably during this whole COVID period for what they came up with last week. I'll feed back to you next week on actually how that looks in reality and what the deals we introduce to them and what the take up is. But on the face of it, we're really pleased and honoured to be partnering with those guys with some of our packager exclusives. That's it from me. Need to get back to work because there's so much of it.
Fantastic. Yeah, it's great, isn't it, to see like the Foundation Home Loans, the changes that they brought in last week are brilliant. And even from somebody like Beverley Building Society, on the self-employed stuff, I mean, it's just really, really helping things along, isn't it? It's
yeah. We could do with a few more higher LTVs. That's one thing definitely that we
I know. Yeah.
We need to see. I think obviously the Chancellor's got he's making a big economic statement this week, isn't he? So let's have a look at what's in there for the housing market, Help to Buy particularly, and hopefully we'll see a raft of changes then on.
I think the biggest the biggest concern that I have with what I've seen in the press this morning is the statement around stamp duty, and he's just sort of said, that's something that might be changing. It might be changing in autumn, and the worry is that might and maybe is going to cause delay. Yeah, so I don't think he realises just how powerful those words can be for completions or to stop completions even. So that's quite a worry. So it'd be good if he actually sort of got off the fence on that one and made an announcement sooner rather than later, isn't it? Really. I
mean, it's doubtful he will change it, but just as you rightly say, just let the market know that's where he stands, absolutely, because what we don't need is people reluctant to put the houses on the market as a result of stamp or whatever it might be. We need absolute confidence and transparency, don't we? We do, definitely. Just for anybody who's watching who's maybe not spotted that this morning, I'm sure you have, but the talk is that from the autumn budget that they're going to plan on changing stamp duty. So they're going to lift the limit from 125,000 where it's payable to £500,000. So that would be fantastic, and that's going to make a big difference to people. Certainly help stimulate the market. We just need that clarity, don't we, as soon as possible on that. So that'd be really good. Yeah. Has anybody got any questions for us this week? Because it's very, very, very quiet on the question front. I don't think. Unusual. Come on, there's got to be one. There's got to be what. Somebody must have a question. Must have. I'm trying to think what. Yeah, I think you're right. I mean, looking at the changes that we've seen this week, it's the LTVs just need to be that little bit higher. But then again, if we can do something, if the stamp duty change does come into effect, maybe people who've been saving stamp duty might have a little bit more money to put towards deposits. And I think perhaps if that happens and lenders get a bit more comfortable with the LTVs, I think that the meeting of the two, we might meet somewhere in the middle, hopefully. That would be good, wouldn't it? Yeah, it'd be amazing. I mean, my personal gut is that we probably won't see much change in LTV wise till maybe September. I think we just need to see where the government lie and what support they're going to give the economy now,
Yeah.
and then see what the fallout is from the end of the furlough scheme and redundancies. Absolutely, every lender and funder I spoke to, they're liquid. They've got cash there to burn, and they will have to, get it out the door. So, at some point. But I think they just need a bit more economic certainty from the government, and it'll kick on from there.
Yeah, so fingers crossed the statement this week will do that. Of course, we'll feedback on that next week if we see anything that's relevant.
Of course.
So I don't think we've got any questions. So that's just short and sweet this week, Joe.
Right.
So
Perfect.
So we'll wrap up then. Let everyone get along with their day. Just under 20 minutes that was. So we'll wish everyone a great week and look forward to catching up next week.
Yeah. Stay safe, everyone. Take care. Thanks, Nick.
See you. Bye. Cheers,
Bye.
Joe. Bye.